Good morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to share with you some of our wave counts and trading plans for this week. The euro is one of our favorites because we are looking for a bullish move, and this is the beginning of the wave 3. We're finding the end of wave 2 before seeing a big wave 3 on the weekly chart. The weekly targets, of course, are going to be first of all the previous high. We're talking a little bit less than the 124, then 126, 128. And from there, we're going to start focusing on a short trade. But of course, this is a huge profit that we can make on this swing trade on the euro. But we shouldn't validate the trade on the weekly chart. We need to drill down, go to lower time frames, understand what we are doing. And that's the process that we are going to make today, that we're going to plan today. First of all, we have a strong move up that I'm calling wave 1 blue. And then we have a retrace that I'm calling wave 2 blue. So my mission is to validate the end of 2 blue in order to find the best price possible, the wholesale price, to get into the trade with the tiniest stop loss. We are talking here about precision. So in order to find the entry on the euro, let's go to the hourly chart. And let me tell you first what I did last week. Last week on the euro, I used this validation, this green candle, because look, we have buyers entering the market after the price moved lower, and I triggered my trade at the 117.14 at this area. Well, a little bit higher at this area. Then the euro went up strongly, and I have my first exit for half of my trade at the 117.51. And the price went to the 117.50. So didn't hit my first profit for 1 pip. Actually, less than a pip. Well, that can happen, right? It's part of the business. So when the market started to go down, I only have a 3-wave sequence. So I tell my clients, hey, we have to be careful, because if price moves below this area, we are going to make a lower low, so it would be better to close the trade here with a small loss, 3 or 4 points. So we did that. I closed my trade here at the 117.09. So it was like a 4 pip loss with a 40 pip stop loss is something tiny, so that's fine. And look, the price then moves down, but we didn't have the price moving below the low yet. And that's something that we need in order to find our trade. Because once the price is able to move below this area, and then we have a green candle closing above, that's going to be the buy trade right there. So we have the price going below, price rejecting and going up. And this is something that Charles Dow mentioned more than 100 years ago, and is the accumulation. Accumulation is when you have price going down. But there is one point where the big guys start buying. Why? Because they have their techniques, because they have their levels, and they start buying. So you're going to start seeing them buying. Then the price moves down again. And once the price makes a lower low, that's where you can start acting, because here is going to be the first entry. So they move up again. And this is going to, if we trigger here, most of the times is going to give us enough room to do something with the trade, because sometimes they need to move the price lower again in order to accumulate more. So they move the price here back again to the lows, but then they buy again. So each time the price moves below the low, they buy. So if we go to the real life and we bring this theory into the practice, we can see that thing, the price goes down, they start buying. The price goes down, they buy again. The price goes down, and here is where we are going to buy it. Right there at the lows. All right? So once it reverses, it's important to see the price reversing. You're not going to buy because the price moves down. Doesn't have any sense. Price moving down plus seeing the big guys buying, rejecting the low. So a candle close above wave X, for example, is enough to go long, just with price action. So that's the plan to get into the trade on the euro this week. Of course, if you sign up for the Elliott Wave Street membership, I'm going to update the plan every day with new comments, and I also have a Telegram channel where I share the trades. This is the S&P. On the S&P, we're seeing the price is starting a wave 2 after last week sell-off. I'm calling this wave 2. It's done. We have a beautiful clear 5-wave sequence, and the plan for this week is to have an ABC. Once we have the completion of the ABC, I'm going long. I'm going to buy the S&P this week just to follow the move up. This could be the beginning of a big wave 3. On the weekly chart, we can see this with more detail, that we're just starting the wave 3. 5,000 area, here we go. And oil is one of my favorites because I want to sell it. I see oil around the 50s. So my plan on oil, this is WTI or CL, it's the same, is to first of all start seeing the distribution. Look, it's starting to happen. So I can tell now that this is my wave 3. I need another corrective wave down. So look, I'm planning my trade with maybe days ahead. So another ABC. And then I need another move up, right? And once I have that leg up, I want to start selling. Once it rejects the high, this is going to be my trade. Not before, so I'm not doing anything here. I'm going to wait for my 3, 4, 5 Elliott wave cycle. Once I have it, I'm going to start selling at the best price possible with a tiny stop loss, and I'm going to hold, well, not the whole position because I need to take partials during the road, but I'm gonna hold the position till the 50s, at least a third part of the position, or a fourth part of the position. I'm gonna hold it till the 50s or maybe lower, and I want to trigger the best price possible. All right, traders, that's the plan for this week. If you want to receive the complete analysis every day from Monday to Friday, sign up now, elliottwaferstreet.com/membership. Let me show you the instruments that we cover on a daily basis. Here on elliottwaferstreet.com, you can visit the membership tab, and you're going to see this page where we have the Forex, the stocks, and the full access membership. You can take any on the trial, $19 per month, and it will include the Forex, all these instruments with charts, with daily video, and same with the futures, and also the stocks. If you prefer the stocks or if you prefer the full access, you are going to get everything with daily chart reports, with the big picture report every Monday, with the daily Forex video or stocks or futures, and with the Telegram access where I post my swing trade ideas, and the new members academy with education on Elliott Wave, of course, on trading strategies, on risk management and tactics. So it's a fantastic course that comes with all the memberships. All right, traders, that's the plan for this week. I'll see you inside the membership. Take care. Bye-bye.